What do EDD auditors look for in a California payroll tax audit? An Employment Development Department audit, an EDD audit, is rarely just a routine compliance check. Unfortunately, it can cause cascading problems in also income tax liability with related entities or payroll tax problems with the IRS as well. It can bring in the Franchise Tax Board, it can bring in the IRS. It can also result in criminal tax charges. Depends what's happening in the background. If you have been issuing net checks to your employees and walking off with the payroll tax withholding, you should be shutting down your business rather than making the Fed and the state a creditor. Because I gotta tell you, the federal government and the state of California pick up 90% of their income tax revenue from withholding from employees' paychecks. They're gonna treat you like you reached into their treasury and stole from them. Hiring the right representation can make all the difference between just dealing with taxes owed versus a business-threatening nightmare. At the tax law offices of David W. Clausing, we leverage our dual-licensed employment tax attorneys and CPAs to provide deep legal and forensic accounting expertise to identify exactly what the EDD auditors are trained to look for. We identified problems before they ever step foot in your office. First thing we're going to do is ask for the time we need to look at your compliance before we submit to that audit. At the outset of the audit, we conduct a comprehensive review where we look at worker classification issues. Folks, you're calling independent contractors that the government's likely to come in and call employees. Oh my God, can that lead to a huge amount of tax liability owed? We look at that ahead of time before they walk in the door. We want to make sure if the EDD is walking into a scenario which we view as high risk, that we minimize the potential exposure, both civilly and criminally. We're looking to minimize penalties and significantly reduce the scope of the audit where possible. The EDD is California's largest tax agency with roughly 10,000 workers. They're administrating payroll for more than 17 million California employees. The employment taxes and withholding bring in billions of dollars of annual revenue to California. As such, the EDD will pursue any lead that might indicate there's payroll tax noncompliance. Well, the only way the state's going to pay them is if they represent they were an employee, not an independent contractor, and now we're off to the races with a worker classification audit. Late or inconsistent payroll tax returns, untimely payroll tax deposits, whistleblower claims, or mismatches between EDD tax forms and those filed with the IRS can all be the reason for the beginning of an EDD audit. One main concern of the EDD is the depletion of the unemployment insurance fund. Therefore, the EDD has set up a task force looking specifically into industries that are real heavy in the use of contractors, including construction, trucking, hospitality, and the gig economy. EDD audits commonly are concerned with four major areas of payroll tax compliance. Worker classification. Here, they're going to be looking at independent contractors that should be classified as employees under California's ABC test. If they find a misclassified subcontractor, that's going to trigger retroactive payroll taxes, penalties, and potential referrals to the Division of Labor Standards Enforcement Board in California. They're going to test whether your compensation is accurate, your calculations of it, and especially the personal income tax withholding accuracy of your calculations. Cash and off-book payments. A lot of employers out there think they can save on employment taxes by paying their employees a mix of low W-2 wages and then spruce it up with cash bonuses that are not taxed. And the government detects it. That's a potential criminal issue. You can get busted for aiding and abetting the income tax evasion of your employees that aren't reporting those cash wages, and you can also get them popped for employment tax fraud. They're going to be cross-checking the quarterly reports to the annual reconciliations. They're also going to be testing the timeliness and completeness of your payroll tax returns. They're going to be cross-checking your quarterly reports back against the annual reconciliations. They're going to be looking for missing pay periods, late filings, and material inconsistencies. California and federal auditors, for that matter, will look for as many people that they can do a responsible party assessment on as they can. Do not go through a responsible party interview without representation. All they're looking for is somebody have the power to say, I paid creditor A rather than remitting the payroll taxes. That's enough to put you on the hook. Auditors will especially take a look at whether owners or corporate management omitted themselves from payroll. If you exclude yourself from California payroll tax coverage illegally, that can be considered tax fraud. They're also going to look at whether the employer properly withheld personal taxes on each employee, whether fringe benefits were taxed, and whether taxable reimbursements were taxed. California Assembly Bill AB 5 was codified into the Labor Code in Code Section 2775. It is now the default presumption in California that everybody that you pay to provide labor is an employee unless they can meet the ABC test. Prong 1, the worker has to be free from control. Prong 2, the worker the subcontractor is doing is outside the usual course of the business that's hiring them. Prong 3, the worker is providing something that's usually an established separate trade. EDD auditors will request written contracts, work schedules, equipment invoices, marketing materials, and they'll even conduct worker interviews to evaluate each of the 3 prongs. The EDD can impose a civil fraud penalty of 15% on unreported contributions, plus a 50% penalty for willful failure to withhold personal income taxes. Returns filed more than 60 days late will also face a 15% penalty. Repeated, egregious, intentional noncompliance with payroll tax rules in California will result in a referral from the EDD to their investigations division, who will work up a case for prosecution in California. A successful defense requires anticipating the domino effect across other state taxing agencies and the IRS. Before we meet with an auditor, we perform a stress test of your business. We basically go in and do the payroll tax audit before the auditors ever arrive, and we know if there are non-compliance issues, which we will strategize with you to make sure we get a civil resolution to your case, even if there are potential criminal undertones to the payroll tax non-compliance.